What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, is a glorious day. Today we're going to be talking about Applied Optoelectronics, ticker AAOI. Now, this one has been in the news lately, lighting up the Twitter sphere and stock twits and everybody. Everybody wants to talk about that. Yeah, you know what, Nishant, you're right. This is why I don't work well with other people. I don't know if you know this, but anytime I do something, I typically, dot my I's and cross my T's, and when I rely on other people, this happens. That's upsetting. I'll fix it later. Just another day in paradise, man. Anywho, can't fix it now because I'm streaming live, but after this I'll be able to go back and tweak it. So anyway, so here we are talking about Applied Optoelectronics. Boy, what a stock. Now the thing about AAOI here is they've already pre-announced. So we know things are going to be good, and that was just a few weeks ago they pre-announced, but the question is going to be, how good are they going to be? And how's the market going to react? So lots of speculation here. I've got my major laser Pandora station going on here, so we're going to be rocking and rolling here. So why don't we get started? So here's what I want to look at, folks. Right off the bat, we've got our price consensus and EPS surprise chart, as always, here on Zach's. Black line corresponds with the right y-axis, which is price. The multicolored lines represent the evolution of our Zach's consensus estimate, which goes along with the left y-axis, which is EPS. One thing you'll notice here, and then of course, red arrows are earnings misses, green arrows are earnings beats. One thing that you guys are going to notice here, specifically with this AAOI channel, is you've got this huge spike in earnings, a big time ramp up. So hopefully that huge ramp up here is going to justify the price, right? And for sure they did. They pre-announced their Q2 earnings, Charles. Look at I think it was 714 or 77, something like that. Somewhere around there they pre-announced. They basically said they expect a lot better numbers. I think I have the actual numbers. We'll look at this a little bit later, but so we are expecting a good quarter out of them. Now remember, these guys are all about those switches. So it's all about this, guys. This is what you got to remember: 40G and 100G. Okay. Now a good chunk of AAOI's business right now is from this 40G, but when it gets to 100G, they really think they got a very good strategy and a good chunk of that market. So the transition is going to be from these 40Gs over to the 100Gs. So that's the size of the gigabit, switch, the optical switches that these guys have, right? So these are used in data centers and things like that. And there is a huge migration that's taking place from the 40G to the 100G. Now the questions surrounding this are going to be, how quick is that ramp up going to take place? How soon is it likely to be? And are these guys really going to be the leader? So they had an early challenge here from, well, this is basically a bear argument. So take a look at this. This is what I want to show you, though. There's a ticker from these guys. This Makem Tech, MTSI, okay? So this was supposed to be the challenge to them. Well, these guys got a little bit of an issue here. They're down 25% today, and I think that's part of the reason why you're seeing Applied Opto be down too. So part of this has to do with China exposure and the switch to the new chips at the pace at which that's occurring over there in China. The good news is these guys have a ton of exposure to China. Applied Opto has 3% exposure to China right now, so they don't have a lot of risk on that side. But they are down here in relation to that. Now, a few things on the technical chart here. drew some retracements from this July low to the recent highs. And you'll see the 23.6% retracement is essentially where we're at right now. You got a lot more support down around 86. That's the 38.2% retracement. And then on the way down, more and more. Now the 50 days sitting all the way down here at 73.95. So that's quite a ways off. But this thing is just, there's an incredible run that this thing has put in here lately. Another thing that you guys have to consider when you're putting this together, the short interest right now on AAOI is 60% of the float. 60% of the float. Right now they're at about 3 days to cover. So there's a lot of shorts out there right now on AAOI, okay? So a lot of people betting against it. And for every bullish earnings or bullish report I could find out of analysts, I found a bearish one as well, okay? So there's definitely a lot of argument and disagreement happening on this stock right now. And again, most of this is centered around how quickly is the transition from the 40G chips to the 100Gs going to happen, and is AAOI really uniquely positioned to benefit in that market? Now, AAOI argues that amongst its competitors, they're really the only one that makes their own lasers and is vertically integrated in the space. So obviously that gives them a lot more flexibility than some of the other guys, okay? But yes, a huge spike in short interest here recently. There's a lot of money betting against it. So when you're talking about that in terms of this upcoming earnings report, what's going to force a short squeeze? Well, a really good report's going to force a short squeeze. These guys are going to go running for the hills, and that's a lot of dry powder there with 60% of the float short. So that's really what the bullish case is that they have a good report and then they chase those shorts out. And then on the bearish case, you're basically saying it's gone up way too fast and that next quarter things are going to start to slow down a little bit for them. Now let's look here. Let's get back to our Zacks analysis. So you see, this isn't a situation where valuations are running away. This EPS number is increasing dramatically along with the stock. So it's a little different story. And you can see the huge increase in volume that this stock has had over the course of the last several months. So it's definitely popped up on the radar now. Now let's look at the detailed estimates page. And you'll see we've got it as a strong buy, and we'll show you guys why. Gross score of A, obviously. Let's go down a little bit here. They're going to report after the bell, and again, they already pre-announced, so it shouldn't be too much of a surprise. But let's look at why these guys are ranked where they are. So this is the revenue numbers. So we've got year-over-year revenue growth of 109.29. Next quarter looks like 75% revenue growth. Current year 77.85. So here's the thing, right? Next year, only looking for 20% growth, right? Only, but that's a huge drop when compared to the numbers that we're looking at here. Okay, so it's really a question of how far out this market's going to look. Here is a number that I think makes a very good bullish case for the stock. Just the headline that this thing may come in at 1,185% year-over-year EPS growth. That headline alone is going to look incredible. And if you're wondering why the stock is 10 times more than it was at a year ago, if their EPS has gone up 10 times, that's at least somewhat of a justification. If you look at next quarter's numbers, still looking for 272% EPS growth. That makes the current year round out about 323% growth, but next year a definite slowing, okay? But how far down the line are people going to be looking? Now, if you look at what the analysts have done, over the last month, 4 analysts have increased their EPS estimate for the current quarter, 4 for next quarter, 4 for the current year, and 3 for next year, okay? So a lot of bullish activities in terms of EPS estimates, and nobody's had the chutzpah to come out and drop their numbers over the course of the last 60 days, okay? Not a single analyst has come out and dropped their numbers. The overall effect to our Zach's consensus estimate, we've gone from 94 cents to $1.28 for the current quarter. Next quarter number's gone from 95 to 130. Current year number from 376 all the way up to 495, and next year's number from 405 to 540. Okay, so still very bullish overall, and that's why you see on that price consensus and EPS surprise chart that these estimates are ticking up along with the stock. I don't know if I have it on this page. I do have it on this page. Look at the PE. It's just trading at 20 times. And I'm looking at a lot of these reports, and they're expecting fiscal year. Basically, they're looking at a 107 price target. A lot of analysts have a 107 price target on this because the 2018 estimates they're expecting is going to trade 17 times 2018. That would take it up to 107. That's pretty astounding when you think about it. Okay, the S&P is basically right around 17 times earnings. So for these guys, 17 times forward earnings is 107. That's pretty darn good. Okay, and I don't usually get too much into the valuations here, specifically on these earnings analysis videos, because we know what we're looking for, but these are more in the more shorter term trades we're looking at, right? Granted, you can use this analysis to decide on if you want to take a longer position in the stock. Okay, let's bust out my my G14 classified stuff for you guys here. Let's look at revenues first. Let's get this to the actual sub-industry that we're under, so you can compare it to the rest of their competitors. And here you see the big revenue growth. And if you notice, like these next few quarters are really where it's at. Getting up over 100 million. So 116 million, 123 million, 128 million, and growing here. So the big quantum leap is really this quarter is probably the biggest leap over the previous quarter, right? It's more than doubling year over year if you're looking at that. So that's just going to be a huge number to see. On the EPS side, it looks even better when you're talking about percentage increases. So 2016 EPS had 27.8% growth. This year is looking like 330% growth 2017. So this quarter specifically, it's going to go from a 10-cent EPS to $1.29. And that's going up 27 cents over the previous quarter. So those are some big headline numbers I think you're going to see that could cause a knee-jerk reaction to the bullish side on this. All right, now before we get into the options chain, there's a couple things I got to say about it. One, I'm not going to say this is an off-the-radar stock, but this certainly is not yet at the level of the NVIDIAs of the world, right? Sorry guys, I pressed the wrong button. Whenever I press that button, this is going to put me, oh no, I blew up my system now. Okay, let's wait for this one to come back. I've upset it. It's very angry. All right, let's go to the, let's just look at the options chain before this comes back. I think I've broken it. Now it's angry. Oh boy. We'll wait for that to load. The joys of live videos, right? Okay, guys. So these options are not as liquid. So a couple of negatives here. We're not going to get that many strike prices, and we're not going to get that much volume. So it means that the bid and the ask is going to be a little bit wider than we normally like to see. Just pull up that front week. We're going to do side by side. The stock's trading at 93. See the closest we can get to 93. Closest we can get to 93. And that's right here. Okay. So this at the money call right now is 610 by 810. So 710 is what that's going to cost you. The put at the money trading 430 by 550. Very interesting to see that. Anyway, so that's 120, 60. We'll call that 490. So you're talking $12 is what they're expecting out of this stock. So 12.9%, almost a 13% move is what they're expecting out of shares of AAOI here. Okay, let's go back and see if this is still blown up. Okay, get out of here. There we go. All right, now I fixed it. Consolidated surprise. So this is going to show me. This is going to show everybody how much this bad boy has moved during its earnings, its previous earnings reports. And again, I guess it's going to get a little bit stingy with me, so we'll just let that load up. Okay. So pretty sizable move. Let's go back to the chart now and look at this essentially $12 that the market's pricing in. So to the downside, that puts us all the way down to 81. So basically the 50% fib level of this move is where they're pricing into the downside. And if you add $13 to the upside, you're going to be sort of this 106 range. So basically all-time highs. So that's what they're looking for here out of shares of AAOI. Now, pretty darn good, I think, on behalf of the options market here, because this 50% fib retracement level is likely to provide plenty of support. So just out of curiosity, I want to see what's going on underneath this level in terms of what the put spreads are trading at. But given the price of that $93 put there, I don't think you're going to have too much juice in those. But let's go ahead and take a look. See if this pulled up yet. Nope, I'm having issues with that guy. Okay. So I want to go where there's going to be a little bit more volume. So rather than these weeklies, let's go out to the August monthly expiration, because we'll probably get a little bit more focus. Let's stop looking at the side-by-side and look at the stacked, and this will give us a little bit more detail too. So here I'm going to look on the put side, and like I was saying, if we go out, well, I guess we got to change from the near the money to show all. Give this a second to load up too. And like I said, I wanted to see puts out underneath this. So puts under 81 pretty much. Just, I'm curious. So here's an 81 put. You know what, guys? I bet you that whatever. I was going to say, I bet you that front week options price, I bet you that got priced wrong, but that's okay. $81. So the 81 puts are out here going for 370-ish. But again, guys, you can't really, well, I guess the spreads aren't too wide. It's about an 80-cent spread. Here you got about $1 spread, and the 89s are going for 350. So this actually isn't too bad. For those of you that are looking for credit spreads here, this can insulate you a little bit. So what you would do here is you'd be selling the 81 put, buying the 80 put. So what you're saying is that you believe that shares at AAOI are going to close at or above $81 at options expiration, which in this case is August 18th. So I'm going to say here that a bull credit is short. There we go. My other screen is getting populated here, guys. So the bear credit's going to be short the August 18th 81.80 put spread for a 20-cent net credit. Okay? So what's going to happen here is you're going to get 20 cents. The amount of money you're going to have at risk is the difference in the strike prices, which in this case is $1 minus the 20 cents that you take in. So you're going to have 80 cents at risk. So you can make 25% on this trade in about 2 weeks' time by selling that out of the money put spread here on AAOI. Okay, that's if you're, I would say, sort of cautiously bullish rather on this, right? Because what you're saying is, well, I don't know what's going to happen on this earnings report. I don't think it's going to be too much of a surprise, and we have this 81 level which is fib resistance. So I'm totally comfortable going down there, selling calls out of the money, or selling puts rather out of the money there, because I don't think it's going to go down that much. Now on the flip side, what you can do is sell, calls out of the money. So here we were looking, what, 106 is what we were saying? And if you notice, these are a little bit more expensive too. You notice there's a bullish tilt to these, pretty much everything here. So if you look at this 106, 107, this is a little bit more rewarding. So selling the 106 call, you're going to get 465, simultaneously going short the 107. Hang on, guys. Let me clarify this. Sorry. This is a bullish, or this is a bearish credit spread, rather. Okay. So you're going to want to sell that call option at the lower price. So selling the 106 call, this is in the August 18th expiration, for 465, and then simultaneously buying the 107 for 435. You're going to net 30 cents here. Difference in the strike price is still $1. So you're going to have 70 cents at risk here after you take in that 30. So this is much nicer. This, you can make 42% on this trade in a very short period of time. Now there's one little caveat I want to point out here, guys. We're making the assumption, which could be false, that we're going to get filled right at the midpoint between this bid and this ask. Now we know with the lower liquidity, these market makers aren't going to be super nice to us, okay? So I just want everybody to know that in a case like this, the actual value that you're going to get for these may differ, okay? When we're doing very liquid stocks, it's okay for us to make these assumptions because we know, or very liquid options rather, that those guys are going to fill you. They're going to move it along. You're going to make money. But when you get a stock like this, with an options chain like this, you may be in for a little bit of a haircut on these things, okay? But I just wanted to point that out. So there's another option for the bearish folks out there. A bear credit is short the August 18th. 106, 107 call spread for 30 cent net credit. Somewhere around there, okay? Now, what I think will end up happening, let's pull this up now that we've got this. Look at the move that we've seen. So you have a 20% move the previous quarter on earnings, 23.8, 7, 20, 19, and then a 2.6, okay? So it moves. This thing flat out scoots. 4 out of the last 5 earnings reports, it's moved basically 20% in one direction. Right now, they're only pricing in about 13. So you got to take that into consideration, folks, when you're looking at this. So I see Trevor talking about a strangle. So you can, and remember, this is a situation where they have pre-announced. So if you wanted to do that, the way to do that is almost pretty much just like we calculate our implied volatility at that level, this 93. Instead, you would basically be the guy that came out there and bought both of these, or sold both of these rather to us, right? So that would involve selling this call and selling this put, okay? And then hoping that the market doesn't move as much as that level. So essentially what you're doing is you'd be selling that call. Let me get this. I don't know why this. Sometimes the calculator decides it's got to take over half the screen. So 910 by 1030. It's basically 970 you're going to be able to sell that call for. And then on the flip side, the 760 by 860 on the put side. So you're talking 810. So you're basically going to take in 1780 in premium. And then you just have to hope that the stock stays within 1780, right? On either side, you can protect yourself by buying a call further out, buying a put further out. That's one way to do it. And if you think, hey, they already pre-announced, maybe they're baking in a little bit too much of expectation into this move, really, that would be a smart way to go. Here's what I think. And I'm going to be bold today. You know, I've been kind of a coward, not going to lie. I've been cowardly recently. I've been right for the most part, but cowardly. And I don't want to even say that. I'm bringing, I guess, too much of a negative connotation to that, right? Like, where's Kenny Rogers as the coward of the county? We've been selling a lot of these sort of out of the money call spreads, out of the money put spreads, but we haven't been very aggressive on any of these vertical calls in either direction. And I think leading up to the show, I was basically letting you guys know, the whole time I didn't have my lower third on and nobody told me. So there, guys, if you haven't seen us in a while, we have a chat room, www.e-chat.co/room/213012. It's free. We're in there pretty much all day. Somebody's in there. Dr. Paul's in there talking to Tej pretty much all day, every day, and Jeff's in there too. Actually, most of you guys, Dean, pretty much everybody's been. So yeah, I've been leaning a little bit more conservative. I don't want to be so conservative here. I'm going to be a little aggressive here. It's because of this. There's two things that are jumping out at me. This number that's going to pop. We are going to see this number in some headlines. It's going to happen. And B, you've got a huge chunk of short interest that's out there. Yes, James thinks I've been okay. It's been okay. Well, here you go, Charles. Let's go ahead. Let me take care of Charles here. co/room/213012. All right. So you guys have that. I'm going to get vertical here, and I'm going to be on the bullish side, and I'm going to show you on the bullish side here, guys. Going out to this 818, I think we can use 93s. Right? And the market's talking about, oh, come on, bar chart. This is going to be one of those days, right, where everything's just going like a little bit awry today. So we're going to look at these 93s. And then the market, we said, is basically all the way up here, right? All the way out towards these 106s. You know I love to do the halvesy, right? That's one of my things. I do the halvesy. So I'll just say, oh, okay, well, what if we just did the 99, right? The 99 to the 93. So the 99.93 gives us a little bit, it's a little bit less expensive for us to put this trade on. And we have less of a, basically, let me show you the risk versus reward on this. Even though we've got the, I know it's weird with the circles, that's okay. So going long, the 93 call is going to cost $970. Simultaneously shorting the 99, you're going to get back $695 of that. So the total outlay here is $275. The difference in the strike prices is $3 minus that $275 is $325, which you can make on $275, or 118% is what you can make on this. Now here's what I'm going to say to you guys. I think if it pops, that 99 is not gonna, this thing is not gonna go to 99 and stop, okay? It's not gonna go to 100 and stop. I think if it goes, it really goes, okay? I think if a move gets put on here, it's really gonna move. So what I think I'm gonna officially do as my trade that pays is I'm gonna scoot this even out of the money. Something I rarely do, but I am. Because by scooting this a little out of the money, it's going to make our outlay a little bit cheaper for us, okay, which could be a good thing. So I can stop drawing all over this thing. And I'm going to use these 95s. then I'm going to go all the way out just to the 100. Look at the math on this one. Now we're going to price out a couple of these because I want to find sort of the sweet spot that's going to be worthwhile. So if we're going long the 95, it's going to cost us $865. If we look at this 100 and sell that, we're going to get back $645. So $220 is going to be the net outlay. The difference in the strike prices is $5 minus the $220. $5 minus the $220 means we can make $280 on $220 or 127%. Okay, so that sort of incrementally pushes up how much we can make on this, from 118% to 120%, just by scooting it down just a little bit, right? And again, if you want, you can even scoot it a little bit further out. I don't want to get too cute with that though. Okay. But this is what I think you can do. Okay. Because this is going to drop your costs a little bit. The other thing you could look at, where's Bill Phillips when I need him? He's out there somewhere. I know Bill Phillips is out there. Looking at calendars on this one, guys. Okay. And the way to do that would be still going long this 95 or even a 93 in this August expiration, and then looking at the front week and seeing what the opportunities are here. Because if a short squeeze happens, it's going to happen pretty quickly, right? So looking at the front week opportunities for being able to sell some of these out of the money and getting some of your money back that way, okay? Or, and I know, guys, I'm throwing a lot at you today, but I wanted to give a ton of options here. I was just in the mood to talk a lot about options. Pricing out the same examples just in this front week. So this means you only have 1 day for it to happen. So this is definitely some instant gratification. So before, when we looked at the 93.99, it was what, 118% is what we could potentially get? So let's look at this 93.99 in the front week. $630 is what that call is going to cost you at the money. And then out to $99, selling that, you're going to get back $390. So $240 is the net outlay here. Difference in strike prices is $6 minus the $240 means $360 on $240. So you can make 150% by going up to this front week. Now, if you think a short squeeze is going to happen, it should happen quickly, okay? And this is a little bit more in tune with our parameters too, right? Because we only got 240 at risk, which is good. Can still make up to $600, but it's just going to happen a lot faster, right? You're not going to catch any post-earnings drift on this one. This is one of those just boom. If it's going to happen, it's going to happen. Very high risk sort of plays, okay? So that's where we're at. That's pretty much what the landscape is for this. So I'm going to say that the trade that pays is long just the next day, August 4th, 93.99 call spread for a 240 net debit. So that's pretty aggressive. That's probably the most aggressive that I've been in the last several weeks. But that's what I'm going to do. And then Thursday morning, or Friday morning rather, we're going to have the morning after session. And as part of that morning after session, guys, we are going to slay this thing. I'm going to be live. I'm thinking what I'll even do for you guys is I might put this trade on tomorrow. But I'm going to tell you right now, I'm going to adjust. I'm going to adjust it to be at the money. So you guys can wait a day too if you want. But I'm going to put it on like in a live account. So I have that ready for Friday morning and you guys can see it, okay? So I'll just one lot it and I'll show you guys and we can talk about it. I think really getting your hands dirty with that is going to be cool. You guys will be able to see that. I know most of you are pretty experienced with entering these trades and getting out of these trades and what happens. But there are a few of you, I mean, we've had a huge influx of new people here. And I think there are a few of you that will definitely benefit from seeing that live. So I plan on doing that. Yeah, a small account, I'm just going to show you guys. And hey, if it blows up, it blows up. You know, whatever. We did our analysis. We're rolling the dice with it. If it works out, great. And hopefully I'll be able to leg out of it so it looks cool. So that just everybody wins, right? That's the plan. And even if it blows up, guys, I'll show you how to recover that quickly too. So no matter what, we're going to have something live on Friday morning to talk about, okay? So I'm excited for it. So if you haven't checked us out on our, live morning after session, one lot. I'm just doing a one lot, Danny. We're just doing a one lot just to show you guys. So we're going to show you live Friday morning. If you haven't yet joined us for a Friday morning, I'm going to open it up to everybody this Friday morning. It'll be free. So if you're not hooked up on the live trader, if you're not subscribing yet, I mean, I don't know what else I can do to get you to subscribe, but shoot me the email livetrader@zax.com to make sure you're on the distribution list so you're getting the notes of when these things are going, when I'm making these videos too. So livetrader@zax.com, shoot me the emails, make sure you're on the distribution list, and get signed up with us here on YouTube. All right, boys. Lotto, you got to get. Lottos are silly, but you're gonna have to. I think you got to get well into the hundreds on a lotto if you think things are really going to pop off. I suggest doing, if you're going to really roll the dice, go out of the money and do an actual call spread if it's something you want to be aggressive with. So, but these are expensive, man. This isn't cheap. I don't think anybody's going to want to go out here and buy, are you going to buy a 115 for 68? Like, that's a lot, okay? That's a lot. So I don't know about the lottos, guys. I think the way to play this is the reaction. So I think we wait, see what happens on Friday morning. Hopefully there's a huge short squeeze. We cash out, and then we fade the move. I mean, that's my trading plan here already. I'm telling you. I want to make a huge pop, rip it, and then step on this thing's neck in the hopes that it flutters on back down. I mean, that's what I'm looking for on Friday, and then we can make some money that way, okay? All right, well, that's all I got for you guys here today on Live Trader. Thank you so much for hanging out. It's been a good one. We got a pretty good turnout here today. Again, tomorrow I'm doing the good, the bad, the ugly trade reviews, but Friday morning, join me for the live Q&A. I think everybody learned something. It's going to be cool, and we're going to go live. I'm going to have a live open account that you guys can see that I threw some money in that we can mess around with. All right, guys, so I will see everybody on Friday. Have a fantastic day. Thanks.